In this video, we're going to compare a CFC's investment in U.S. property in two different scenarios. In the first scenario, the U.S. shareholder will make a high-tax exclusion election for the CFC. In the second scenario, the U.S. shareholder will make a 962 election for the CFC. We will assume that the CFC does not earn any Subpart F income. In year one, the CFC has pre-tax income of 100. The foreign corporate tax rate is 25%, so the foreign corporate income tax is 25. The after-tax income of the CFC is 75. Assuming no inclusion is categorized as 959C3 E&P. 959C3 means non-PTEP. The shareholder makes a high-tax exclusion election, and so there's no inclusion in year one. In year two, the CFC makes an investment in U.S. property of 75 for 4 quarters. The investment in U.S. property creates a 956 inclusion of 75, which is taxed as ordinary income to the U.S. citizen. The 75 of E&P is reclassed from non-PTEP 959C3 to PTEP 959C1. Now let's look at the 962 election. In year one, the E&P is the same. We have pre-tax income of 100. We have foreign corporate tax rate of 25. And we have foreign corporate income tax of 25. So the after-tax income of the CFC is 75. And it starts off as non-PTEP. We make a 962 election. With a 962 election, we have a guilty inclusion to a hypothetical U.S. C corporation. The C corporation needs to add back the Section 78 gross up, which is just the taxes that were paid. The guilty inclusion plus the gross up is 100, less the guilty deduction of 50, gets us hypothetical corporate taxable income of 50. The U.S. corporate tax rate is 21%, so it's 10.5 before foreign tax credits. The foreign tax credits attributable to the guilty is 25. We can only claim 80% of the foreign tax credits attributable to the guilty under Section 960D1. That percentage changes to 90% in 2026. The foreign tax credit limitation is 10.5, so the foreign tax credits allowed are 10.5, and the hypothetical U.S. corporate tax is 0. Due to the guilty inclusion, the 75 is reclassified as taxable Section 962 PTEP, so it's 959C2 earnings, which are PTEP earnings. In year two, we have an investment in U.S. property of 75 for 4 quarters. There's no inclusion under Section 956. Instead, the E&P is merely reclassified from one type of PTEP to another type of PTEP, from C2 PTEP over to C1 PTEP. So in scenario 2, we had no inclusion in year 2, but in scenario 1, we had an inclusion in year 2. And that's it for this video. I hope you enjoyed the video.